The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I am here with two stocks to put on your aggressive growth stock radar screen. Let's get right to it, and I think you can see it here. It's PDC Energy, and ironically, the ticker is PDCE. PDC Energy. How about that? And it's PDCE as the ticker. And this stock is a Zacks rank number 1. That's a strong buy. And it has an A for growth, as just about all of my aggressive growth names will have, and a C for value. And, I think I've said in the past, and a lot of people have heard this, and they like when I talk about this sort of thing, but I like to see a strong growth divergence. And what does that mean? That means a strong growth style score and a weak value score. And that tells me right away I'm on the right path in the aggressive growth world. So investors that are looking for growth are not looking for the same things as investors that are looking for value. Let's move right along here, and we go about our business here. We're going to take a look at the surprise history, the earnings history. And that's here on the detailed estimates page. And we can see it's a beat, and it's a beat, and it's a beat, and it's a beat. The real big one here kind of skews the average, but still we see just about 80% average earnings surprise over the last year. So you're beating the number. And then what happens is what's going on with the estimates? We can see the estimates moving up $1.02 to $1.07 to $1.12. I love that. In this quarter, so multiple opportunities to move the number up. We'll see it $1.06 to $1.32 next quarter, and the full year numbers really moving up, straight up, 428 to 510 next year, 444 to 595. That is what you're looking for. You're looking for earnings estimates moving higher if you're a fundamental investor. And then let's take a look at the valuation here on this one. Woo-wee! Here's your forward PE, only 8.6 times forward estimates. Growth's been challenged. We're not going to, duck that idea. It is a significant one. So a lot of that's tough to swallow. There's no doubt about it. But a low price to book, a decent price to sales. That tells me the market values each incremental sale. And here you can see margins. Look at this, 10%, 10.2% up to 42%. That looks great. If we can keep that rolling, things will be good. Let's take a quick look at the chart. And boy, oh boy, after a long, ugly slide here, over the years, suddenly we're just going to turn things right around. And it's right in the last 4 quarters where we just started beating and the stock just starts performing. And you can see the earnings estimates, we're going down, and now the estimates are guiding us higher. And, that is what we want to see. Earnings tend to guide these stocks. And when a company starts earning a lot more, there's a reason a lot more investors want to buy the stock. And that's exactly what's happening here for PDC Energy. All right, just to make sure so you can see that ticker, let me roll this up here. PDC Energy, Zacks rank number 1. We'd love to see that sort of thing. Oil and energy name, definitely worth keeping on your aggressive growth radar. All right, number 2 for us is Chewy. Boy, I got a dog, and the neighbors just got a brand new little tiny puppy, and it is the most adorable thing. And you love puppies, but Chewy is going to become and they're going to have a new customer. My neighbors down the street with a brand new puppy. Chewy, CHWY. It is a Zacks rank 1. It's a strong buy. And this one has that growth divergence that I love to see. So an A for growth and an F for value. So growth investors are looking at this name. Value investors, not so much. But let's take a look at why growth investors are looking at it, because it beats big time. And it beats even bigger. Woo, what a beat. That is a beat. Let's get rid of my scribble and actually look at this. 15 cents when a loss was expected. So that is a big time beat. And yeah, that'll skew your average all the way up to 292. But you can see this isn't the first time where the company was looking for a loss and reporting a gain. And boy, oh boy, that is great. I love to see that. And we got lightning in a bottle? I think we can have it again, because this quarter right now is looking at a loss of 2 cents. And when I see big loss estimate here and then coming in with 15 cents or 11 cents, I tend to think that's an indication that management is sandbagging the analysts and telling them, oh, it's not that great, things aren't that wonderful. But it turns out they are, because look at the next quarter too. We're looking at 4 cents, 4-cent loss here, and that's estimates moving the wrong way. That's a same here. Wrong way in the near term, but over the long term, over the full year, and the Zacks rank cares much more about the full year than it does just a couple quarters. We see the number moving from 4 cents to 10 cents, and next year 26 to 31 cents. So that's why we got a Zacks rank number 1, even though some estimates are moving lower. But I think that there could be some sandbagging going on. And that just shows that that's a good thing, because that tells me management knows how to talk to Wall Street and get them to have beatable numbers out there, because I want the company to always be beating. ABC is always be closing, and ABB is always be beating that number. So what happens when you buy Chewy here? You're paying a multiple. That is a big time multiple. But again, low earnings base, stock probably moving higher, as we're going to take a look at the report or the chart in a minute. So yeah, you're really paying up, but you're getting that growth, 32% top line growth, and I love growth. I love to see growth. The price to book, wow, 500 times, meaning our book value right down here is 17 cents. Pretty low down there, but 4.5 times sales. It tells me the market values the sales of the company. Operating margins moving in the right direction, and once we float over to a consistent profitability level there, we could see the stock really move. So let's take a look at the chart, shall we? Boy, oh boy, what can you say about this? I see estimates generally trending in that right direction, that way. That's good. Here, there's a lot of noise here. This is kind of hard to see, but here I'm going to trace the outline of the actual stock. It goes up and it comes back in, and now it's headed back up. And yeah, it went up to 120. So that line should go whoop straight up and then kind of right back down. Can this stock go from where it's at now, and we're going to take a look at the price now, $82? Does that go back to 100? And I think if we get another good beat with operating margin moving into the positive, into the green there, then for sure this thing goes right up to 100. Over time, people sign up for this Chewy. You get your pet food, your treats, all that stuff delivered. They've got a lot of selection, good stuff. I've used them in the past. They're wonderful. And I hope things continue to go well for them. So this is definitely a name to keep on your aggressive growth radar screen. Well, that's it for me. I am Brian Bolin. I am the aggressive growth stock strategist here at Zacks, and those are 2 names for your aggressive growth stock radar.